Good morning, everyone. Welcome to the NTW2025 Blockchain in Banking and Finance. I'm happy to welcome you all today. We're excited to have you join us for this insightful session. I would like to introduce our trainer, Mr. Kamlesh Nagwari, who will be leading today's class. Mr. Kamlesh, over to you.
Yeah, thank you, Gigi, and welcome to Currento masterclass session to get a basic understanding about the different topics on technology. So there are a number of series of topics, and today uh, we have a topic on blockchain in banking and finance. So I have created this presentation, so I will walk through, and then I will also have another slides which I will present. So I think blockchain, everybody now understand is now is a maturity level, and banking and finance applications are now adopting blockchains at a different level and different kind of use cases. So we're going to talk about that one. But before, I think this is my intro. So I have almost a decade of experience in blockchain, and working with various governments and state governments and few banks and fintechs and even Reserve Bank of India for a couple of initiative on the CBDCs in India. So large number of experience in enterprise blockchains for so not a crypto specific thing, but uh, enterprise and private permission blockchain. So today we're going to cover what is blockchain, because before going to understand the use cases and application, like we need to understand what is blockchain and what offers what kind of blockchain. And then we can talk about blockchain adoption and banking use cases, and then some success stories like what has been already implemented in blockchain. So so in simple definition, if you see like I categorize the blockchain in three four different characteristics, which is very important what blockchain offers. So it is a simply is a technically is a block plus chain where you have a your data is stored in blocks, and that blocks are chained like linking to each other, so that there is no way of tamper proof, and there is no way of any kind of manipulating the data. So simply blockchain is a database or the backend technology where you storing a data and data in a such a format it is immutable. That means like nobody can modify and temper it. And also it manages the timestamp, like when this data is inserted in blockchain. And so this is one way of data structure, but another thing is also store the data in multiple nodes or multiple servers. So that is also makes impossible. Let's say if someone want to modify the node data in one node, but the other node is intact, so is impossible. Correct. And another thing, you use the cryptographically heavy. So every transaction is stored in blockchain uh, is a cryptographic hash format, and even the what is the communication happening between the nodes and between the applications, that is also completely cryptographic conversations, or kind of we can say like simply use the private public key cryptography out there. And fourth element of the blockchain is called smart contract. So now, because data is immutable, data is decentralized, data is distributed, now how you could run the business application on top of it. So a smart contract is another important feature where you can write your end-to-end business logic or your um, application logic, and which is running on blockchain independently and execute independently. And even let's say generally in the businesses, like when always issue on the reconciliation side, or always issue uh, on the business terms and condition, because those business term condition written in maybe some software or paper, which is prone to error and prone to manipulate. But when the that same business contract in smart written in a smart contract and even blockchain, that means that smart contract itself immutable. So from data to business logic is immutable, transparent, and shared among all the stakeholders together. So there is no way of kind of any kind of issues. So now keeping all this basic fundamental what blockchain offers. So blockchain offers first security. Security is like the data is stored in a hashing format, cryptographic manner. Communication between the node and application also cryptographic convergences actually. So and also using the decentralized or distributed nature of data storage and the blockchain chaining linking of data in a blocks is another max. The data and the smart contract immutable in a blockchain. Single source of truth. That means like unlike the normal centralized web architecture where there is one server and there is one application where uh, every application trying to access the data from one single server. But in blockchain, the number of servers available and are having the same exact information, same exact copy of the ledger. That means like whatever the node you are trying to access, it has the same information or same data. So that means like whatever the data you are reading or whatever the node or whatever the endpoint of you reading in the blockchain is the exact same copy. And now using the immutability, using the smart contract, using the hashing format, now you could trust the data, whatever the data available on blockchain, you can trust uh, because there is a blockchain ensure that like there is no any way of manipulation or there is no way of any immutability of the thing, right? And all this give the transparency. So now what does the transparency means? So like for example, there are number of nodes and number of application and the business logic also running in a immutable way. So now whatever the application or whatever the business executed, it is completely transparent because it's not like we have a 10 node blockchain network and one node can ride it. There is a consensus mechanism is another one core component which ensure that like whatever happening in the blockchain, it is visible to everyone and it is acceptable by everyone. Everyone means the every node, every participant in the network. So this is the and now using all these characters of security, single source of truth, transparency, and trust that create a uh, disintermedia. So that means like you could remove the middleman or the middle stakeholders from the your business cycle. Simple example like Swift. When you're making a payment, cross-border payment, especially there's a Swift network come in the picture, and Swift is some kind of third-party company. And why we need Swift? Because there is a trust required in the cross-border payment. So using blockchain, you could enable that trust without dependence on third parties. This is a typical definition of blockchain. So think about like how the current businesses. So is simply one buyer customer kind of record, but you can relate with any of the business networks. So think about here where there is a buyer supplier, there is some kind of customer, there is some kind of bank record, and now in the currently every businesses and every application is having their own database and their own setup of applications actually. And and whenever they are interacting via different way of communication via APIs, via data exchange or whatever systems, they always need some kind of reconciliation because the different application having a different proof of data. Now think about if we have a common ledger between all these uh, entities, then there is no need of reconciliation because whatever the data you seeing, everyone's seeing the same data. So typically it will solve the data reconciliation issue and trust and transparency issue between the business stakeholders. So thinking about having even common ledger instead of having a separate ledgers like this, and then you are creating your own softwares to solve the reconciliation issue, settlements or whatever, because everything is settlement, right? At the end, whether it's a business, whether it's a supply chain, whether it's a banking, or whether it's a capital market. So now if we understand the terms and terms which we just discussed and relate what it offers to the ecosystem. So let's say business networks, now connected ecosystem. That means like every participant and stakeholder is connected to each other, and that brings the efficiency. Efficiency in terms of uh, transaction settlement, or efficiency in a kind of operational efficiency, maybe business processes which are taking days and it could be solved in seconds. Another is shared data across participant. That gives the transparency on the data. Like nobody can say like my data is different and I have a different proof of the transaction compared to you, because now data is shared across all the participants. So now they can see the complete transparency within a system. A smart contract where you can write all your business terms and condition, and that execute automatically. So the smart contract is self-executing contract, a self-executing business logic, consensus mechanism. So whatever you writing data or writing business contract or deploying a smart contract, all must be agreed by every participant or the stakeholder in the network, and that gives the trust. So like nobody say like I didn't agree on this terms and condition later, or this is the now transaction I have done, because whatever updated in blockchain, it is agreed by every participant in the stakeholder in the ecosystem. That gives the trust. Immutability, we understand like the data is stored in a chaining format, and then the hashing is used, and then the decentralization is used, distributed and cryptography. All these give the security in the data and the application side. And distributed ledger means like same ledger is available to multiple stakeholders. So it also solves the fault tolerance kind of thing. So like for example, in centralized web architecture, if central server goes down, then your application goes down. But in blockchain, because there is a number of there is no kind of centralized ledger. There is no centralized server at all. Is a decentralized servers and distributed systems. So always your system available. Uh, there is no any kind of thing. Okay, so now this is the basic what is blockchain and what it offers and what are the components out there. Now, now if we understand like blockchain is not just crypto or the tokens or the stable coins, right? It is beyond that one. And I have highlighted a couple of use cases, different industry wise, but we will focusing in this session especially on banking and finance. So if you take the insurance and banking, there are use cases in the identity management, the KYC, the cross-border payment, interbank payment, trade finance, loan mortgages, and the now tokenization or the deposit tokenization. All this is the use cases. Similarly, in equity, debt, derivative, escrow account could be managed. Like decentralized finance, another very important area emerging, where what are the you can do them in traditional finances, all could be done on a decentralized manner as well. Let's say borrowing, lending, or earning interest on the tokens, or all this thing. Similarly, use cases in healthcare where the track and trace is very common, where you want to see the traceability of the pharma or the traceability of the drugs, health records, organ registry, clinical trials. So all this, just not this use cases, are already happening all around the world. Government is very popular implementing use cases from the digital identity, e-governance, land records, digital currency, CBDC, like which is a state government, which is the central banks are running. I think more than 130 countries already having a CBDC. I will talk about in the slides. Uh, Manufacturing and supply chain, though, like some track and trace is the one common use case is every industry is applying, like Walmart, Boeing, or like any other thing. Warranty management, or the predictive maintenance as well, kind of use cases. And there are many use cases like say retail and CPG, food authentication, track and trace. Uh, I think track and trace is very common across multiple industries. Education, like issuing a certificates on blockchain or micro credential. Food traceability is very common, like Walmart implemented it, or couple of traceability projects across globe. Mining where the this asset ownership or raw material traceability, even the mining tokenization, gold mining tokenization, a real estate, I think recently very popular. Uh, so real estate fractional ownership or title insurance kind of thing. So recently UAE, Dubai started tokenizing the properties. I think is a becoming reality. It's not the use cases and POC only. So there are a number of use cases in industry wise, but we will focus on the our main topic, banking and finance. So couple of use cases I have defined. Then we will go to the detailed one as well. Some questions you can ask. Yeah, we will share. So first, like digital lending. So this is like digital lending. So currently the lending process takes very much time, especially when it's coming to the home loan or the any of the uh, high amount loan, or not just lending of the retail lending but commercial lending as well, right? It's very lots of multi-party coordination, multi-level execution, complex reconciliation, or the verifying documentation, lack of transparency in the execution process. Lots of things in digital lending. So even let's say currently I'm going through one loan application and is almost 1 month and still my loan is in progress. So I think digital lending could be another use cases, and I think that's why in decentralized finance application where there's a simply lending could be done in second. So because let's say you simply define a smart contract, let's say you taking a 100K dollar loan from the some kind of the decentralized finance exchange, and you simply putting a contract. You need a from this person is giving 100K, and you are agree to paying, let's say, 2% interest, and there is no manual intervention. When this smart contract is executed, then it will automatically fund is transferred to you, and at every interval of the EMI, the amount is going to transfer to the lender. Simple. Maybe this is not exactly can be done in a traditional loan banking system because you have lots of regulation, lots of verification, but at least the processes could be simplified about the document verification or the maybe uh, defaulter check or the credibility, credit score. All this could be make more efficient using the blockchain where you have because whenever you have multi-party coordination, then blockchain can helpful. And now I think I just already mentioned like what is the benefit. One is the benefit of speed, flexibility, transparency, security, uh, and customer experience. So all this, I think simple like there is a multi-party coordination is required. You can implement a blockchain, and that even reduce the transaction cost and reduce the uh, verifying or the even reduce the even defaulter rate as well, because now you clear one because generally what happens in a lending kind of business, right? Generally sometime some banks favor particular borrower on their relationship or whatever, because there is no system like maybe we can think about the previous example, let's say Vijay Malia case in India. So I think, or not just one, even the duplicate financing as well. Let's say for example, if I have a get a business and going to commercial lending to one bank, and I go to the another bank and go to the another cooperative bank, for example. Now, because there is no connected system and there is no connected banking, and so then there is a chance of the duplicate financing and duplicate lending. So this kind of issues could be resolved via blockchain. This anti-money laundering, which is very important thing, and know your customer. So this is KYC is very critical for the every businesses, and currently it takes 30 to 50 days depending on the KYC, and also let's say even if it's taking less time because lots of KYC is digitized nowadays, right? But let's say if I am having a KYC at the Standard Chartered Bank, but when I'm going to loan at, let's say, JP Morgan, or becoming customer of any other bank, then I need to do again all those KYCs. So think about if the KYC become a one common KYC infrastructure between all the banks or between all the entities, or not just banks. Let's say think about the bank, insurance, and mm, then it will solve your KYC issues, and it will also solve your anti-money laundering, because if flagged tracked at the one bank could be notified to the other bank, so other banks don't clear that particular customers KYC. So this is the another use case which is very popular. And another issue in the KYC and is like data misuses, because in the KYC lots of data is being collected by different participant from the participant, and then stored somewhere in a banking infrastructure or banking storage. So this is another challenge where you could use blockchain based verifiable credential, or in a such a manner where you are putting all these records in a blockchain, in a trusted and hashed format, and and even maybe giving control back to the consumer only, and then you are just verifying the data, or the consent based uh, data sharing actually. So this is another could be use case, and a couple of banks and couple of regulation actually coming where customers should own the data, and because a number of thing issues happen where this data is shared to third party companies for the on the so this kind of use case out there. So one is the efficiencies here, data privacy security could be bring, or the anti money laundering issues could be solved using the blockchain based KYC and ML. Trade finance, which is very common use case and most popular use cases in blockchain. So you must be heard about the trade lanes, V dot trade, or standard chartered use cases, or letter of credit, invoice financing. So number of use cases. Letter of credit is very popular. So I will show you like who are implementing. But simply, let's say in letter of credit, there are number of business parties are involved, and and as you can see, the typical this flow only. There is an importer, exporter, there is a custom ports, there is a government department, there are ports authority, and there are banking. All this is there, and all this communication via happening via, whether traditional or where the silos application, and that's why lots of reconciliation thing is required. Even companies, big banks having large number of teams and large number of systems who are managing the letter of credit kind of system. So this could be implemented, and that's why a number of use cases already implemented. I will show some slides. Another is like document approval flow. So because this is like large number of documents is shared between internal departments or between the banks or even the same bank only. So this could be another implementation where you create a blockchain-based document workflow which has the temper proof, traceability, and authenticity of the data. CBDCs, I think, which is very popular. Almost 130 plus countries is already implementing CBDCs globally, and large number of cross-border CBDCs is I will show you those slides as well. Another is agriculture credit products. So is some kind of giving credit to farmers or giving credit to the middle companies via warehouse receipt financing or invoice financing, or those kind of thing. This is not use case for the countries like Malaysia and US and UK, but the countries like developing countries where this lots of self-help groups out there, or the crowdfunding groups out there, like microfinance or this kind of. So there is already such implementation in India. So if you see, like there is one use case which implemented in the one district in Telangana, which is one state in India, where they implemented this loan disbursement of Sirinidhi scheme, which is the micro finance institution. So this kind of use cases, they're not suitable for the big countries or the big cities, but small villages kind of thing. So now these are some use cases, but the tokenization is another very popular nowadays due to especially getting approval in the US, like US Genius Act, where is clear the tokenization of the money, and I think a number of use cases. So tokenization is a way where you are digitally representing of an asset, and that asset could be anything. It could be even it started with NFTs, but it could be now money, stocks, derivative, real estate, certificates, invoicing, metals. So simply any asset which has some value, you could convert in a digital form and tokenize it. So let's say digital kind of asset, and what is the benefit? Is the benefit of liquidity, asset management infrastructure. So that's why if you see recently large number of institutions, let's say Stripe acquired the company called Bridge, Mastercard partnering with MoonPay, or the all this JP Morgan, Standard Chartered, all the banks is having their own tokenized projects. Or let's say JP Morgan having a project called earlier they're calling it the JPM coin, then rebranded as Onyx, now rebranded as Kinexis, right? So it's a similar kind of even Citibank having a product called City Token Service, HSBC having a product called HSBC Orion. All is a tokenization project for the different use cases. Let's say use cases, let's say deposit tokenization, or the bond tokenization, or the tokenization of the other instruments. So all is happening out there. So we will talk about some use cases, some case studies in the upcoming slide. But tokenization is simply where you representing assets in a digital form on the blockchain and efficient. This is a number of use cases in a tokenization. So like cryptocurrency, which everyone knows, then utility token, we also aware. Security token is also during the COVID, not COVID, but during the crypto ecosystem. But CBDCs, which is emerging from last 2 3 years, where the wholesale CBDC, retail CBDC, stable coin, which is very popular nowadays. So where number of use cases like stable coin is like is a crypto kind of cryptocurrency only, but is backed by one fixed fiat currency, whether it's a $1 equal to one coin, or whether one INR, one per Singapore dollar, but whatever. It's a simply thing one fixed okay, I will explain. So, so stable coin like is a currency, but is a fixed value. Is a kind of cryptocurrency, but fixed value. There is no manipulation. And this is the concept when the stable coin is started. It started when cryptocurrency prices are fluctuating or manipulate or is uh, very fluctuate day to day basis. And between the kind of between the transaction, people trust on the stable currencies. So stable coin and that fundamental. NFTs, I think we heard like is a non-fungible tokens, whether physical asset, whether digital asset, whether gaming or IP. You creating that token as an NFT, and some kind of digital representation of any art kind of thing. Okay. So this one. So I think just let me check some kind of question. Can the token be took? I think so. Generally, there are different token standards. So let's say generally cryptocurrency is having a token standard called ERC-20, that is fungible tokens, like how the rupees or how the kind of dollars work, right? And NFT, let's say if you have, let's say, luxury necklace, yeah, luxury any painting, you tokenizing that thing. That is NFT. And most banks in Malaysia are now currently integrated with the credit duration history, which is shared across all banks that not on real time. Same policy successful in the central banks and customers in there. Okay, so I think there's a good question from Noor. So you say like most bank in Malaysia now currently integrate with the CCRS and CTOs for the credit application history, which is shared across all banks. That's not real time, right? And also have the same policy across all FI under central bank, and bank always request customer permission during the loan application. Okay, so I think a similar kind of thing needs new thing is you. So a similar kind of structure is now being created in many countries. So even India as well, there is a one entity which has the detail about all the credit and loan history. So, but what is the thing, right? Let's say this system, let's say this CTOS system or MLA system will be managed by one centralized entity. So this is centralization there, right? So still some kind of manipulation could be out there. Second, the operational efficiency, because currently if something issues, you need to rely on the that entity to settle your transaction or settle your query. Uh, so technically is a it is a it is a centralized system which operated by one company and one entity, and you are relying on that thing. So using blockchain, this the same structure could be implemented on blockchain, and instead of this, because the currently is not real time, right? But if it's a real time, then you see the real time visibility of the all the transactions out there. This is the only benefit. And I think, and even is not necessary key like we need a blockchain, because let's say if because blockchain is all about technology, and if you can achieve that trust using the centralized way, and if the trust is between the participant, then there is no requirement of blockchain, because blockchain is a way to bring that trust in a non-trusted entities. And if already is in place, maybe blockchain could benefit in operational efficiency perspective, because trust is already in places. Let's say, for example, let's say central banks are issuing a CBDC, right? And central bank is already trusted entity, and nobody can deny the central bank's sovereignty. But still, central banks are using blockchain for issuing a CBDC. Why? Because there is a technique, there is a operational efficiency of issuing. There is a, let's say, smart contract programmability, which is not available in a centralized system. Those kind of benefit. Okay. Okay, and like let's say, kindly please explain the types of trusted application, smart contract, current use. So I think there are number. I think the smart contract is not just kind of we call it a smart contract. A smart contract is a way to interact with blockchain. But when the Ethereum is started, they given this contract name as a smart contract, but technically is not a smart contract. You simply whatever your business logic, you writing in that smart contract the contract logic, and it is a middle layer between interacting with your application and uh, uh, your backend system. But let's say typical, let's say example about any airlines insurance, or no, or when let's say when you're traveling and if flight get delayed, and if there is insurance in place, so there is no need to require the claiming insurance, because there is already data available. You know the what is a flight takeoff time and what is the delay, and you simply calculate that thing. Smart contract simply calculate that thing and disburse the as per the agreed contract of the flight delay insurance, right? So this kind of a smart contract, let's say agriculture insurance, or claims, or let's say settlement of any, let's say let's term insurance, for example. Now let's say, for example, anybody has claiming for the term insurance. So like, why the number of weeks and months of required to verify? Because if there is a data available, let's say the data available of someone death certificate digitally available in the system. So simply this could be used as a reference and can settle the minimal transaction and then verify the detail in the later. So this kind of smart contract could be in place. Okay, so now CBDC, which is very popular, so is a digital form of currency which is a legal tender created and backed by central bank, and this is the response to the cryptocurrency ecosystem when all this cryptocurrencies being started, because central bank want to be in the race and don't want to be run out of their monetary policy system, so they use it. They started the central bank CBDC is a blockchain based digital currency, and now if you see like currently banks, how central bank works with the print real money and then distribute to banks and then bank distribute to the customers. Now in the CBDC, it could be direct or it could be this thing. So simply the digital token of the same currency, but is a more programmable because you writing this CBDC in a smart contract. So it is become a programmable. So let's say there are a couple of use cases happening in India where let's say government is providing the direct benefit transfer or the subsidy to the farmers. Now it is issued as a stable as a CBDC, programmable CBDC. So now let's say any subsidy given to farmers. So now this amount can't be used for any other purpose. It could be used on a selective agriculture merchant only. And let's say the money is given to, let's say, any direct benefit transfer to any person or any entity. So that entity can't use that money anywhere else. So this kind of use cases is a very powerful, and that's why this CBDC adoption is globally happening. So almost every country is exploring CBDC. Currently, 130 plus countries. This is old data, but there's a 130 plus countries is implementing CBDCs, whether it's a research stage, whether it's a production stage, whether this is a pilot stage. And I think all of this, the 11 is already in launched state, 18 is pilot stage, and couple of organization in development, in research, and couple of cancelled as well. And if you want to check the current status, go to this Atlantic Council.cbdc tracker. You get a real-time visibility of the CBDC. And the metaverse, I think it was very active earlier, but now that is not, that means banks is exploring. But when the metaverse hype is around 2022, number of banks were trying creating their presence in a virtual experience in what metaverse. But I think metaverse story is not pick up due to maybe the bandwidth or maybe maybe availability of the infrastructure, because metaverse required the virtual experience and the AR, VR, and all this. Maybe technology is not mature. That's why it's not, because otherwise it's a good thing. So, but couple of use cases are already happen. Let's say in India, there's one bank called Union Bank of India where they were using the metaverse for opening their branches in a digitally in a metaverse environments. But it's not picked up that much. Uh, this is copy use cases which I mentioned about the in the decentralized finance space. And this is couple of use cases which give you idea like what is already happening. So this is a couple of banks or the fintechs. Let's say American Express is using a blockchain. Bank of England, which is having a CBDC. Bank of France. This Bondi value is based in Singapore. Actually, they're having a completely 100% uh, bonds exchange platform on blockchain. Central Bank of Nigeria implemented a CBDC. Federal Bank of Boston, Bank of Monetary Authority of Singapore, Visa, JP Morgan Chase, all is having a different blockchain based application, and they are part of Hyperledger. Hyperledger is a private permission blockchain. And there are a couple of use cases here. So there's a Sentinel Pay is having a this one. This is another this use case. Bank of America Trade Finance Network, ING Zero Knowledge Range Proof of Solution, Standard Chartered Digital Trade Chain, Visa B2B Connect. Even recently Visa and Mastercard even partner with stablecoin companies as well. uh, JP Morgan, which is very popular use case, which is earlier they calling as a JPM, now they calling as a Onyx, and now they even rebranded as a Kinexis, which is even doing a billion dollar transaction a day, uh, and almost I think $3 trillion worth of transactions so far on the on I will share some slides later. But this is simply blockchain based, their own digital digitally tokenized thing. And similar way, other banks like Citibank or the Citibank, HSBC, and other banks are trying it. This is a Australian exchange. They are running live on blockchain from last 2 years, and this is a completely 100% securities exchange on blockchain. And this is the one project where the Central Bank of Cambodia is having a CBDC running. And this is a trade finance is very popular. So all this you find out all these banks are having a different blockchain and different project, and different banks are involved out there. So you can find out the HSBC, BNP Paribas, or the Bangkok, or the ING, US Bank. So a number of banks having a so because trade finance is very critical and very complex systems, because typically in other letter of credit there are hundreds of such document getting exchanged. So there are a number of use cases in even in the trade finance. Letter of credit is one, bill of lading, document, or the supplier onboarding. Couple of use cases out there in the trade finance system. This is HSBC and the Monetary Authority of Hong Kong actually did it, and a BIS Innovation Hub on Fabric and Besu, the tokenization of the green bonds. So tokenizing the bonds and I think and currently lots of this securities or government securities being tokenized on a blockchain based infrastructure globally. This is couple of good data. So let's say Broader is having a one platform called DLT repo. So all the repo rate transaction, not repo rate, is a repo where the short term trading of the bonds is running live from last couple of years and is processing a $1 trillion worth of transaction every month. Siemens having a 60 million euro pound digital bond on public blockchain. DTCC is another the largest uh, uh, settlement entity in US. We settle the bonds in US. They are bonds and stocks actually settle in US. They creating a completely T plus. You must be knowing that T plus zero, T plus one, T plus two. So T plus zero means the real time settlement of the a transaction or a trade transaction. And they're already running live parallelly, and this even old data, 1 or 2 year old data, they are processing 160,000 transactions per day. Similarly, there are green bonds owned by Goldman Sachs, HSBC, Bank of China, and credit. So, number of things is happening out there. So now, even let me show you some other slide which have more good data, which I created. So, funny gosh. Okay, attendance form. Let me show you good use cases. So from here, let's see. Uh, so we have around 10 minutes. I will finish it. So this is the India CBDC project where it's already having a 4.6 million users, and this is even last year data only, because current data is not shared by Reserve Bank of India. And there are 13 banks now actually 18 banks in pilot, and they are running two CBDCs, wholesale and retail CBDC, and government securities and purpose bound money. Purpose bound money means the programmable CBDC. I just give an example. They are giving a direct benefit transfer or the subsidies on programmable CBDC. And this is this one project by Mas in Singapore, Project Guardian. It is a DeFi ecosystem where you can see like lots of number of different banks and the financial institution is part of it. So they are using the JP Morgan's Onyx project. Onyx is now called as a Kinexys actually. So DBS, Onyx, and the SBI Digital Assets Holding created this Project Guardian, which is a decentralized finance ecosystem or pilot use cases around the different banks and different financial institutions. So this is you can find the complete detail report on this one. This is talking about this JPM coin. So you see like there is a 1 billion transaction each day is happening on JP Morgan tokenization thing. And the typical use case is digital financing, settling repo transaction in minutes, and tokenized collateral network or tokenizing the deposits or this kind of use cases. And the similar kind of use case in Citibank, where Citibank calling is a City token service. So they are using the cash management or the cash management where, let's say, if I have one entity in multiple countries and I need to manage my cash within these different countries, generally in traditional is a cross-border payment required. But now using tokenized money, you could trade these tokens across the countries, across the entities, and using the city token service. But this is completely regulated stuff. So that's why this token is uh, so this tokens is being eligible to only available to only the entities who are the customer of city. This JPM thing, and this is similar use case and similar kind of target customers. Similarly, HSBC also having, but I not mention here. So, and this is a broad raise, which is the repo platform, which is now doing a almost $1 trillion month of repo transaction settlement, and is like this, and they are already having a 20 to 24 primary customers, and its saving now is an increase 1.4 trillion per month, and is saving around $2 to $3 million using this platform, right? This is a bond DE value. So more than 10,000 full size corporate bonds fully available, fully tokenized on this exchange. And Citi is a, even securities is a custodian for this platform. So you see like all these different bonds available out there. And similarly, there are hundreds of use cases. So if you go to this Hyperledger use case tracker, there are a number of use cases available on the like UTC trade is there, and and let me okay. And even there's a new good architecture or good proposal by, I mean, BIS Innovation Hub is talking about everything is a tokenized. So like how the internet have flow the information across geography, why not same could be done for the financial assets, or this calling the project called Finternet, where everything will be tokenized, whether is a property, whether is a money, whether is a currency, everything will be tokenized, and complete infrastructure is available. Okay. Is there any website out there listed down which like businesses services accepted tokenized? I think nothing is there because it's completely siloed market, and there are a number of initiatives happening in different geographies, and even the different geographies having a different companies. Let's say Citibank is doing the similar thing, HSBC doing the similar thing, JPM doing the similar thing, right? So all is very common things, people are doing it. So there is no any kind of standard. But I think if you want to see what is all happening, you can go to this HS Hyperledger use case tracker, where you can find out the number of use cases available with their customer names and their success stories. This Finternet is very good concept. So this is like kind of creating a global infrastructure of the digital assets. Uh, think about like this, where there is a one country central bank one, central bank two, and because when 130 plus countries having a CBDC is in place, let's say in next 5 years, then how you will make cross border payment or the cross asset sharing between the, I think all this is a complete ecosystem is building up. And similar to Finternet, there are regional wise is also, so there's a one ecosystem called regulated settlement network, where the settlement of the regulated settlement. So already there are 10 banks are participating. So JP Morgan, Citi, Mastercard, Swift, US Bank, Wells Fargo, Visa, and is a kind of interoperable network for multi-asset transaction, which is 24 by 7 and programmable shared ledger. Programmable shared ledger means like the programmability is in place in the network. Similarly, there is a regulated liability network, another network for the transfer and settlement of the liabilities. All these banks are and the institution are part of it. Similarly, the Kenton dot network is another one entity initiative, where is created the kind of uh, financial financial infrastructure for various uh, institutional assets tokenization, and all this number of use case, number of banks, and number of institutions, startups, the innovations is part of it. So you said it's a Bitwave, 7 Breeze, digital assets, Hidden Road, Hydra. So there's asset tokenization companies or the different platform companies as holding companies is a part of this ecosystem. And there are a number of such investors. Project Danbar is there by Project Helvia from BIS, Mbridge, which is a multi CBDC platform between different 22 public sector institutions, Swift, because Swift is the largest cross border or payment platform, right, globally. So they also don't want to left behind. They started exploring the CBDC. So they partner with 38 global institutions and where they're doing a CBDC interlinking with the existing Swift network. This is the project Guardian, which are talking about where they're defining the industry standards because talking about the tokenization, you need to have some kind of standards in place, then policy guidelines and framework, and then creating an ecosystem. So this is a project Guardian, which is run by the Mass Singapore, and this is some kind of ecosystem what they're doing actually. This is HSBC Orion, which is a tokenization platform by HSBC. This is similar to Citibank doing, but this is more focused on the gold tokenization and the bond tokenization, and Citi is more focused on the cash management thing. So this is Citi one, and there's a couple of projects by Mars and Bias, the Project Guardian, Global Ledger One, Project Orchid, and you can find out the more detail from this websites. This is another project Agora, Unified Ledger, or so I think number of initiatives being out there, and there are a couple of things happening in India as well. So there's a separate company being set up called India's Banking Digital Infrastructure, which is having 18 bank consortium for digital infrastructure for the banking use cases. So let's say this is one use case like deep tier financing, deep tier supply chain financing, and there's an invoice, duplicate invoice. So maybe why I'm saying because this similar kind of use cases could be replicated in other countries as well. Because these simple use cases where you have a deep tier supply chain financing using tokenizing blockchain, and this is a simple invoice financing because many generally the duplicate invoice financing is the concern always, and the domestic letter of credit. So this could be seen as out there. Then corporate expense management. So let's say generally the Visa and MasterCard use the corporate cash management, but now you can use the CBDC because CBDC in program CBDC, so it will be cheaper compared to Visa and MasterCard corporate expense management. And this key, so I think this is another the area development where like the passwordless authentication, you need to have a ID, password, and OTP for authentication. That can be done using blockchain, calling as a verifiable credential or the zero knowledge proof, where you are not sharing your data, not storing your data in somewhere in a uh, and verifying it. So this kind of this thing is there. So I think let me take some questions. So just 2 minutes left. Unfortunately, don't see this part on. Yeah, so maybe I think I think, but Malaysia is doing something. I think this Currento Academy. That's why Currento Academy is having a presence in Malaysia, and we are doing lots of this education awareness and this thing. But I think Noor, you can connect me or connect to anyone in Currento, and we are happy to help and support what can be. I think the number of use cases happening globally, especially in a tokenization space.